before you know it, it's been 5 months and we're nearly at the end of May of 2023. That brings us almost to halfway through the year and the bearish narratives continue. If it's not a banking crisis, it's a looming recession. And if it's not a looming recession, it's the fear of the US debt ceiling crisis. Today's video, I want to show you what happens during a debt ceiling crisis, what happens after a debt ceiling crisis, and more importantly, how you can make money from these bearish narratives, what is actually going on in the markets right now. Make sure you like and subscribe. Of course, if you want, share the content with a friend. It goes a long way to helping out the channel. The best thing that you can do here for free. Another quick shout out just in the top of the video description, our TIA membership. The prices are going up. You got 4 days left. Get on board with that if you want to join us before the next price increase. Let's start it off with BTC. Right now, the market is sitting around 26,700. The main thing I want to note here is what is going on and what can we look out for in the coming days. Yesterday's video, we looked at the potential downside and what is happening with the price ranges so far. What I'm going to look at in today's video is the possibility of these being the support levels and what we can look for to the upside. So we've covered the downside. That area is around that $24,000 to about $27,000. Basically, what Bitcoin likes to do through all of its price ranges is have some consolidation during different price brackets. And you can see that happen on the way down and on the way up. We've covered the price bracket of 18.5 or 17.5 up to about 20.5, 21,000. So basically call it your $18,000 to $21,000 area. And when Bitcoin dropped back into that zone in the banking collapse crisis of March 2023, you can see we springboarded out of that very, very quickly. It's had its time down there. It looks like the investors have found enough strength at those levels, which is why when we had the most fearful news that we could have seen in 2023, the market was bought up very, very quick. Demand came in underneath those prices. And then we hovered around the next levels, the next trading range of about 22 to 24, bring it up to about 25. And then eventually the market's obviously pushed above that. We had a retest and now it's pushed above. So there's this gap sitting in around these levels of about 24 to 25 up to about $27,000. So we're kind of sitting in that zone right now. We looked at that in yesterday's video, the possibility of the downside, but what if this is the current low? And you can see just on the short term here on the daily and on the 4-hour chart that Bitcoin is putting in some volume and pushing above that level, coming back to retest it. So if this is the last time we see it below that 26,500, what do we need to see happen to the upside to know that that is the possibility? I'm not saying it's going to happen. What is the possibility of that? Well, the next levels are around here, about that $27,500. That's still a short-term move for Bitcoin to get above. Does it happen over a weekend? Probably not. These are sort of moves that tend to happen during the week when there is more trading volume. But if we start to see it on the weekend with some volume, then that's the area I'm looking out for. Overall, the next level, the 50% on the daily, is from the April 14th top to where that current low is. That basically gives us our halfway point sitting around 28,400. You can see that we've sat on that before and then broken down. So it's a key level that the market needs to get back above, hang out in this top half of the price range here that it's currently set. Sure, if this thing moves a little lower, then we have to reset the 50% level, wherever that may be. But for now, that's the information the market's given us. And so that basically means this is the weaker section of the 50%, and this is the stronger section. You wanted to get in the top section right now. So if you wanted to get in with the lowest risk, you'd be buying up here and setting the stops just underneath those swing bottoms, just in case we get that pullback. Otherwise, looking for that move to the upside. And if you want to play it safe, then you wait for the breakout, you wait for the confirmation to get into that market. In terms of the weekly, again, this is something we looked at in yesterday's video, the possibility of those downsides. And in terms of the time frame itself, how long that could take, well, potentially this week or over the next couple of weeks. That's sort of the time frame that we're looking at based on what we've seen in the past. Bitcoin doing that roughly 8 to 14 week blocks, whether it's to the downside or to the upside, depending on the market. So that gives us the timing for these moves. And so far, we're 6 weeks down from the top, with 2 weeks ago, being the price low. We're only a few bucks off that previous price low, but essentially it's been 6 weeks down. Don't worry about a green bar in between. There are still lower highs and lower lows. They're down bars. They're not just because they're a green bar here, it doesn't matter. What you want to see is the higher, lower highs and lower lows for the down, and the same thing in reverse for the up. So that's where we're sitting at with BTC, probably over this period, which has to do with the debt ceiling crisis. It might just be waiting on what's going on there, because the US dollar is also hovering and it's moving up, whereas Bitcoin is remaining steady. So it's a good thing for BTC. But before I get across to that, TIA Premium is going up. So if you want to get on board and join our members and our traders over there who are absolutely killing it here, Mr. Lee doing very well, 100% returns on eGold here. Crypto Ricardo, 11%, 62%, 95%, 121%, a little 10% here as well. So it's making your profits, 46%. And a massive one on Render, 282%. Well done again to all these guys. And this is basically just the update since the last time I showed you this on the channel. 136%, 55, so on and so forth. 8. There's just so much going on here. Guys, check it out. Link top of the video description. That's for TIA Premium to learn to trade cryptocurrencies and stay safe in the market while making your profits. Over to the US debt ceiling. So this is the fear that everyone is worried about, the next narrative. And yep, I still see all the comments from people saying, it's a good time to be going short in the market, or you wait and see until this narrative plays out. We've heard it all before. I don't know why it doesn't get so old for so many people looking at this next news narrative. The other week it was the recession came up again. The week before that, who knows? It was another thing. I remember from March, it was the banking collapses, and then we had more banks collapse in May, and the markets just keep going up. The thing to note here is we trade the markets. We don't trade the economy. We trade the markets. We don't trade the economy. If they're going up and you want to make money and you want to go long in the market, well, then you got to buy low and sell high. If the markets are going up, just do what the chart is doing. If the news is telling us that we have to wait for some sort of problem that's going to arise in the next week or two, the market already knows that. The market knows that already, and they're pricing it in. Debt ceilings. How many times have they happened? 74 times the debt ceiling has been raised since 1962 to 2011. History of the debt ceilings raised. I'm not going to go through these numbers. It's ridiculous. It's raised upon raised upon raised upon raised. It happens all the time. It's not new to the market. They know that things will get worked out, especially when we're in such a bullish year. Whoa, people are going to be really triggered by me saying that. By bullish, I mean the prices have gone up. They've gone up since the cycle low of October 2022. We'll get to that in the chart in just a minute. There it is. Prices are up. Nasdaq, there is your October low. Prices are well and truly up from that point. But to put it into a story, so you can understand potentially what's happening here, why it doesn't make sense, which is fair enough. If you're sort of new to the market and you're an investor and you're trying to get your head around how things are going on, and all you hear is the debt ceiling, got to wait for that. Oh, the recession, oh, the yields, the 2 and 10 yield inversion is always something new. Here you go. Here's my analogy. Have you ever had to take a crap really bad while you're out of the house and thought, if I don't make it to the toilet in 5 minutes, I'm going to crap myself. Guess what? You are able to hold on for like another 15 minutes until you find a toilet and everything is all right, aka crisis averted. I've definitely been in that situation. Have you been in that situation? Yeah, that's what's happening in the US right now. There's some bad stuff going on, but probably going to get over it because they've done it all before. You know you're going to make it to the toilet. And if you don't make it to the toilet, you'll figure out what to do, just like James has done here. He's figured out, he almost crapped his pants, but he did it in a bush. He figured it out at the end of the day. And the US will figure it out at the end of the day. The market knows that, and the market is now closing at its highest price in 2023. It's the highest close it's done in 40 weeks. There is the bar. That is what we've just seen on the S&P, and we are closing now at the highest prices. Look at this on candles, pushing again. So these were the fears of May, late April, early May. There was some more regional banks going down there. There was some other story about something, and now we go up again. So in terms of the macro, I'm very confident in this move to the upside based on our cycle analysis. So this is the big stuff that we do in TIA. So this is understanding the macro cycle, the economy, and the real estate cycle. This is what drives everything else. Like I said, this price is going up. We have added a ton of content. So if you're a beginner and you want to understand what's going on out there, this is how you're able to do that. Learning step by step, piecing that together so that you can remove the fear from the markets. And plenty of our members are also trading cryptos, building their portfolios. And if you want to learn more about that, you can always go over to the Discord and see plenty of the reviews as well, TI reviews right there. So coming back to the SP 500, we are now 10% up from the banking crisis low, 9.90 to the peak of the week. We're at 9.99, so basically 10% away from that low. Meanwhile, we've had many bearish narratives in that period, and the market is now closing up higher and higher above the 50%. No doubt we're going to get some bearish moves to the downside. We're going to get some pullbacks, because once markets go up, they have to have pullbacks. Look at all the moves to the upside, the pullback, the upside, the pullback, the upside, the pullback. That's going to happen. The bears will come out again. You can basically predict where it's going to happen. This also happens in reverse. It happens in reverse as well to the downside. So whenever we get a period of the bearishness, then to the downside, you can start to see where those support levels are. You'll see the bulls come back. You'll see the bulls come back, come back, come back. But we're looking at it in terms of a macro picture here. So moving across, the bears are going to come back at 4,300 points. They're going to come back again at around 4,500 points. There's going to be a couple little areas in between as well. Potentially this little top here, but it's not going to be as strong. I'd say it's going to be somewhere around this 4,280 to about 4,320. So there's going to be some more bears come back. There's going to be a bit of a pullback there as well. And it's just going to keep going on and on like that throughout 2023. Nasdaq, looking at the Nasdaq pushing to new fresh highs as well. The highest weekly close this year, and in the last 58, potentially even 60 bars. So this close is probably just around the exact same price. So it's nearly 58 to 60 weeks, the highest close for the Nasdaq. Obviously, this is off the back of NVIDIA. And of course, if I don't mention every single reason why, there's going to be someone triggered in the comments, and that's their issue. Got to be watching the content, subscribe, follow, like, share it with a friend. We talk about the reasons for this. The main thing I was thinking about there is that people saying, well, this is based on only a few stocks going up. We've talked about this multiple times. That's okay. At the beginning of moves, like we are in the bull market here, bull market measured from the cycle low, this is part of the bull. This is, we're not discussing the bull when it goes crazy. We're talking about stage one of the bull market. The cream rises to the top. We talked about this yesterday. Cream rising to the top. Therefore, a few of the stocks, like in crypto, when the start of the cycle comes, usually Bitcoin goes up. Usually Ethereum goes up as well. Then there's going to be a few other good projects out there. That's why a few of the stocks are pushing these markets up. It's not until the end of the cycle that you're going to get more of the stocks pushing the price up. That's the end of the cycle. Think about cryptos. You're basically seeing the cream rise to the top, then you scrape a little bit of that cream off, you've made some profits, and you go and throw that cream on a whole pile of crap. And the crap is every other stock in the market, it's every other altcoin, meme coins, whatever coin you want to gamble on. In this case, whatever stocks or penny stocks you want to gamble on, that is the end of the cycle, not the beginning. You don't need all of the coins or all the stocks to go up in the beginning. All right, so that's pretty much the reason there. I'll probably have to come back to it multiple times because there are a lot of narratives that are floating around the market that keep confusing people, and I want to try and avoid that confusion. All right, that leads us to the money managers that are turning more bullish now. So we've been talking about this the entire time throughout the lows. You guys remember that. We looked at the June lows, we looked at the October lows, the December and the March lows. Plenty of reasons for this. We have been on the macro bullish camp for this whole period here as the markets climb up, and we've been patient because majority of people aren't patient. In terms of the money managers, they're now turning more bullish. So they may not necessarily be able to get in at the lows because they have different risk parameters that they have to meet while they're managing that money. They can't be buying up everything right at the lows. They got to wait as well. But what we're seeing is more money managers turning bullish. You can see that right down here. And again, and each of these points have been pretty good times in the market for them to turn bullish. And there's still a lot more left in the move. So you don't want to be left behind and waiting on the next breakout and the next breakout and the next bearish piece to be overcome by the market. You need to have some signals to let you know to get in as early as you possibly can. So on each of these 4 occasions, not a lot of data points, but each of these 4 occasions, you can see 6 months later, the average return was 4.74 and there was a 100% win rate. Another 100% win rate here 1 year later, and the returns were about 16 to 18%. The average was 18, the median was about 16%. So that's what I'm looking at right down here. Now, there's some more massive news looking at recessions happening across the world. I've covered Germany a few times as it hit new all-time high prices. We'll get into that in just a bit and relate that to the US. But just one last reminder, TIA premium is going up, 4 days left. I don't want you guys to miss out if you have been interested in getting on board with TIA premium. Plenty of trading happening over in the group as well. So get on board with that and get your 500% return. Well done, Wookie. That's huge. Okay, guys, let's get on with the recession. So Germany, Europe's largest economy, hits recession as inflation hits consumers. So these are the big headlines. This is going to be something big again. They think the UK is going to do the same thing. Guess what? Gross domestic product fell by 0.5% in the fourth quarter of 2022 and 0.3% in the first quarter. That's a technical recession. Technically speaking, US was already in a recession. We're looking now at the GDP percentage change from preceding quarter, 2022, quarter 1. There you go. These are negative. So underneath this 0 line is negative. So 2 negative GDPs is a technical recession. They haven't called it a recession in the US yet, but technically speaking, this is what the metric used to be. Technically, they had a recession. Well, the US had a recession. We also had the US also had a recession in 2020. So we have the business cycle dating here. These gray shadings are recessions. And there was also a recession called by NBER. So a comment the other day saying, why did you say 2020 was a recession? I didn't say it. NBER dated recession said it. So these are the recessions throughout the US. 2020 had a very, very quick one. So in the last 2 years, you've seen 2 recessions. You saw the 2020 recession when everything went ballistic, and you saw the GDP go negative in 2022. So trying to ask for a third recession in 3 years, good luck. Good luck, guys. Maybe you'll get it, but the market has already seen 2 of them. I'm assuming it knows what is going to happen next. But like I've said, in a few years' time, at the end of the cycle, when everything is going crazy, we'll get to that. There's still plenty of time. Then we'll see a recession after that point that people will think, we've seen it before, everything's going to be fine, and it won't be. That's a few years off. Right now, everything is pointing to the upside. We've seen it on the Nasdaq just skyrocketing. We've seen it on the SP500. We have seen it on the German market here. Here is the DAX. That is a new all-time high last week, and the market now bounced, even though it's seen a recession. And we've seen in the UK, new all-time highs. Market is now finding some ground, potentially above those previous highs. So stick with it. It can be a little tricky and hard to navigate. That's why I've suggested TIA premium over there, and prices are going up. Nonetheless, subscribe, share the content with a friend. We'll be back next week with more updates on the economy, the cycle, and of course, BTC. Thank you so much for your support. Go Red Bull this weekend at the Monaco Grand Prix. Let me know in the comment section who you're going for in the race. Guys, I'll see you back here on Monday. Until then, have more fun to get more done. Peace out.